The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. This is Monday morning. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days. And this is a very special day. Why? Because there is an all-time high in the Dow Industrials. That is remarkable, given the circumstances, the background circumstances that we've just been going higher and higher, and that any news is now constantly taken as good news, even when it's bad news, potential bad news, that is. Not only that, with the backdrop of the Middle East, you've got crude oil. That crude oil has dropped a lot, and that really is helping as well. So let's go. Thank you, Steve Rhodes, for 2 great hours. And we have programming here right through 6 o'clock, and it's archived. You can hear it again and again. After me, you've got Larry Pesavento. So we've got programming that is to your benefit. It is, in fact, educational. It is constructive, and hopefully you will call in at 877-927-6648. Ask a question. We'll try to get to the answer as soon as we can. So the Dow is up 138 at 17,081, breaking above the previous high in the 17,070 area, 78. What's really important about this particular move is that the Dow is now leading. We've been rotating through all these gyrations where the S&P would lead and then the Dow would lead. Let me go through the numbers. Then I'm going to go to this particular chart that I'm showing here, that I show my subscribers to my opening call every morning. This is where you see the Dow, the E-mini, the S&P, in this case the September futures daily chart, and you see the 120-minute chart. We'll discuss in a little bit more detail. Right now, what I'd like to do is to go to the numbers, and the numbers are like this. Dow's up 138 at 17,083. S&P is up 12 at 1979. Comp index is up 33 at 4,449. Actually, this time the Dow on a percentage basis up 0.83 is leading those other two. You've got the VIX, which has finally pulled back after having a couple of up days. It went down to 1148 this morning, and it's down 60 cents. You've got, this is going to be quite fascinating to see, because actually I should do this now. I'm liable to forget. In the gold index, you've got GCQ. This is the gold August contract, having made a peak F in the Chapman wave methodology, a peak F at 1346.80, and that was basically on Friday. Opened Sunday night a little bit lower with a high of only 1340.40, and plunges down 28.20 right now. And this is actually going to be trough F in the 120-minute chart. Says, hey, you might have a little bit of a bounce now, but 1316 is going to be really strong resistance at the 200-period moving average after that peak D top in the 120-minute chart. So let's go on. We've got silver is down. Silver is down 45 cents at 21.00. And you've got high-grade copper at 3.2690. Now, this is going to be very interesting, and I'll explain why. HGU 14. High-grade copper is in leg D in the daily. I'm not sure what it's going to be in the 120-minute chart, because so far it's a B, and it might be a B minus. But most importantly, in the copper's September contract, this is leg D, with a nominal high last night above last week's high, and we're going to be watching this real closely, because at D in the Chapman wave, that's where you've got to be somewhat careful. That's where you could have the deepest and longest pullback, unless certain things happen, and we can discuss that as we move along. Let me go on. We've got you've got bonds, USU 14. That's the September bonds, down a little bit, down 9/30 seconds at 137 and 3/30 seconds. What's interesting about that is that you've made a peak C. There should be a D. But within the context of the weekly chart, you're in really a trading range. It's kind of a rectangle. And the rectangle says, got a lot of resistance at the old high of 138 and 10/30 seconds. And you should have a lot of support at 136 and 3/30 seconds. That's the weekly 9-period exponential moving average. And then the low that was made 3 weeks ago at 134 and 11/30 seconds. That's critical to hold. I just want to show something right now, and that'll be the continuous contract. Has a slightly different feel to it because you can see the monthly chart has very strong resistance. It's trading at 137 and 3/30 seconds. And so that's just about the same. The continuous contract is just about the same as the September contract. And what's interesting is all that the September contract has to do is clear 139. Let's say it starts to trade in the 140 area. That would be very important. That would be very positive for bonds. Now, how can bonds keep going up and the stock market? Well, that's been the issue all the time. And in fact, bonds have been propped up by the Fed, and the market's been propped up by the Fed. So we've got a Fed-related action here. Let me just show you the dollar DXY. This is the index itself, kind of stuck. But what's interesting is DXU14, the contract itself, also stuck at 80.23, up a penny, no, down 0.004. And I'd like to just show you two things. EUR/USD, and that's going to be the euro stuck in a trading range, and the USD, what did I say? USD JPY, that's the dollar Japanese currency, also stuck in a range. Oh, isn't this interesting? So now I want to look at an IWM, which is the iShares of the Russell 2000. Having a little bit of a bounce here, but not a very good looking chart at all. Very selective move this, because before the Russell led to all-time highs, and now the Russell's kind of lagging. Let me just look at the XMI. That's the major market index, is more a composite of everything, because what you've got is just 20 stocks, but it rotates through the different sectors. So it's defensive, it's cyclical. Let me just draw this in here so that you can see that 1898.27. 1898.27. That's the number to clear. It could still do that, but it's very interesting that it's basically in this rectangle, unless it has a big spiral to the upside. And that'll also be important because that'll make the weekly chart leg F/B. Oh, there's ABC. Yeah, leg F/B. Now let's come back to what I would like to look at here. And just want to put a couple of things in perspective here. In the gold GCQ14, we had that peak D top in the 120-minute chart. Look at this, QQQ. This is the QQQ series, and it says that at 95.27, today's move is E. I just want to explain this. I had a couple of questions about it, so let me just get to that now. Look, I'm going to make it nice and big. This is the QQQ 120-minute chart. This is a 2-hour chart. Let me open it up so you can see it in its largest form. Right there. In this particular chart, what you've got is a move from the lowest low. We're going to go to the low of the close on the 12th of June, where the low was 91.73, and that kicked off. In the Chapman wave, what you look for is the lowest, most identifiable low bar. You want to always go to the left to see what it is. And in this case, I'm talking about this particular low right here, just off the 200-period moving average support. And then what you want is to see the technical start to improve as the price goes. And sometimes it can be like a V-shaped pattern that goes soaring up, and it makes a very quick A to B to C to D. Other times it does that, but it is a stair-step move. So that if you got in incorrectly, you'd always get stopped out, even though it did succeed in doing exactly what the Chapman wave methodology attempts to do, and that is to get it to at least 4 higher peaks. Well, in this case, it goes peak A, pulls back, peak B, pulls back, peak C on the at 11:30 on the 17th. At 92.70, and then it pulls back again. Pulls back quite deeply. In fact, it goes almost to the low of the bar that came after leg B, to make peak B at 91.96. Well, 91.89, even lower, is the leg before it goes to D. So I had a question. What happens if the price goes below a previous trough? We call them troughs on the downside. No, there are techniques that deal with it, like the H pattern, lowercase h, that goes to a lowercase m. But most importantly, as long as the initial low bar, in this case the low bar at 4 o'clock on the 12th of 91.73 is not taken out, that means pierced to the downside, you count the peaks to the upside. And then it has a sudden move that I call a right arm extension. The technicals start to move higher, but the MACD is stronger than the slow stochastic, and you get one big move that goes to 93.57 at 11:30 on the 24th of June. This is what really the questions were about. So what happens there? Well, because the price came down and went below the lows of at 1:30 on the 23rd of June at 92.51, basically it starts a brand new move, and the stochastic turns quickly up in a V-shaped pattern. The MACD flirts with the red line, the slow-moving average, and it supports it, and then it turns up and it goes peak A, peak B, peak C, peak D. And at peak D, the fast-moving average, the green line, is still so strong, and the stochastic is still holding so beautifully in the 90% area, that you don't get anything more than just a 2-bar pullback in the 120-minute chart, and then it breaks out and goes to 95.71, which turns out at 1:30 in the afternoon of the 1st of July to be the top, because it pulls back in 3 troughs, trough A, trough B, trough C, to 93.63. Here comes the answer to the question. What is the wave count? And I'll tell you that it's a very simple procedure, but it does offer a couple of questions that are sometimes a little difficult to answer. The moment it goes above 95.71, this is the QQQ series, the Power Shares QQQ Trust Series 1, without having taken out the left side low bar, that's the start of the buy signal to buy mode of 92.43 back at 4 o'clock on the 24th of June. It says that this, in fact, could be a continuation pattern to a peak E or a brand new B. And then you say, oh man, one is potentially very negative. Sorry, this is an F, shouldn't be an F. Let me just fix that up. That should be F/B. Oh, my example needs to be corrected. And if it's an F, you say, uh-oh, we've seen what happens at a peak F. It can pull back really sharply. And then on the other hand, you say, wait, B is very positive. What do I do? Well, the answer is very simple. If you're already in the position, you do nothing. You just raise your stop on a portion of your position, and you have the portion of the position prepared to be taken off, and you have to watch the rest of it very carefully, because a break under something important like the 9 EMA would be a serious incursion into negative territory. I'll be back and we'll talk about this particular technique as soon as we get back. Now it's up 129, S&P's up 11. Basil Chapman, Tiger Technicians Hour.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Up in a moment with the chart that we were surveying, and that was QQ 120-minute chart. But first, we want to go to Rich in Orlando. Hi, Rich. How are you?
Very good, Basil, and yourself?
Very well, thank you.
It's a beautiful, warm day in Orlando.
Oh, good. Yeah, we have a beautiful, warm day here in Boston.
Good job. On this TRAN, it's like it's a biotech. It's like it was hit pretty bad there a month back or a couple months back, but it just seems like it's sort of building and kind of just slowly creeping up. It's above your, the 9-day exponential average that you mention a lot. I don't know, your thoughts. That's really what I was calling about.
Okay, so this is a very interesting stock in that that was just a news-related gap back in March of 2000, March into April of this year, from a low of 880 the next day, must have been, goes to the low of 324. They didn't get an approval or something.
That's what my guess is. I really don't know the history of the company, and I'm not sure.
So, okay, so let's look at this, folks. And what I'm going to do now is I'm going to just show you. I'll get to the monthly chart in a moment. I wanted to look at this because on the shorter term, what's fascinating, the reason why I love to have 3 time frames up simultaneously is because it gives you a sense of the structure of the chart formations in the shorter term, that's the daily, the intermediate term, that's the weekly, and then the very long term. And when you're looking at biotechs, it's so funny because I was just doing the QQQ and I was talking about this kind of stair-step move to the upside in a U pattern. And when we do that, what happens is sometimes the decline off to make the peak is quite steep, and you've basically lost a lot of points if you didn't take it right at the top, and then you have to wait for the next momentum play to go to the upside. Well, this stock has gone to higher highs and higher lows, and it's done exactly the same thing. PRAN, Prana, Biotech ADS, foreign biotech stock trading at $2.64, up 3 cents. So what happens is it goes to a low of 147 twice on the 7th of May, and then on the 8th of May, and then it starts a nice move that goes to 175. Well, you know that the 147 to 175, 30 cents, that's a big percentage move, over a 30% move. And then what does it do? It makes a little double top, but it holds the 9-period moving average, and then it spikes above the 9 EMA. As the MACD is improving, stochastic's improving, it goes to peak B, all the way up at 224, except it comes back down again to 166. That was the kind of breakout level before, and it keeps doing that. So when it does that in a sequence, when I look at a stock like this, I look immediately and I say, this looks very much like a biotech stock that every in a very sequential way, X number of bars, it just has a big spike to the upside and then pulls back. And then what happens is it goes to a leg C, and that's at 235, pulls back, but now it's making smaller and smaller retracements to the downside. This time, it's starting to hug the 9-period moving average, and it does this technique that I call walking the 9 EMA. That's the exponential moving average.
Right.
The MACD is still good. The stochastic goes up into the 80% area. And what does it do? It goes to peak D, pulls back even less, spirals up to peak E. Remember, this is a stock that was down in the 140s, and now it's at 275 on the week of the 9th of July, pulls back for 3 weeks. This is the 3rd week, and it looks like it's attempting to break to the upside. So that's the daily, and the daily says, hey, very nice action up above the 9 EMA. What does the weekly chart say now? Remember, the weekly chart's the one that had that huge skydive.
Big drop. Yeah.
That was a huge one, and it looks like it's trying to repair itself. So now I look at the weekly and I say, okay, the 9-period moving average is at let me just see what it is at. It is at about 245. Am I correct? No. It is at about 256. And the price now is at 265, so that's up. And all it needs to do is go above 275. The high today is 272. Anytime this week, and it extends leg C, because all you do is 1 penny above the previous high. That was last week again. Now, the MACD is moving up nicely. It hasn't crossed positive. The stochastic is good. So I have to grab the monthly chart, and I have not notated this, but I can tell you right now that it does look as if it's got an A, B, C, and it's gone to a peak D in the monthly at 1329 for that strong decline of 140 to 147. Now it's trying to repair. So give me a moment during the break. I'll finish this up, and we'll talk about, do you have any position now?
No, I don't. I'm just looking at it.
Okay, fine. So that's good to know, and we'll see whether this is something to start a little nibble in, and I'll be back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians. We have a question, and we have a question from Rich in Orlando. And the question is, what about PRAN? Prana Biotech. Someone in the den said, let's see, what did he say? Peaky said, yes, they are looking for a cure for Alzheimer's based in the land down under. That's Australia. And this is the pattern that I'm looking at now, and it corresponds to what I'm looking at in the daily chart. And the daily chart says it's made the potential flagpole pattern that spiraled up to the last peak of 275, and it has a low of 241. But in between this is trying to have what I call an inside buy mode Chapman wave that would go peak A, peak B, peak C, and maybe one more spike that gets close to, right on, or just above 275, the high that was made back on in the 2-hour chart, 11:30 on the 9th of July. So the risk here is that you're paying up 263 and you've got 275, so 12 cents was about 4 or 5% price move. But at the same time, everything else is saying that there's a good chance it's going to have one of those periodic pullbacks. And if it does that, you'd be getting into the position with maybe a 10, 12 cent increase in price with the potential for a pullback that would be all the way down to the 240 to 236 area, maybe even fill that little gap with a high of 240. So normally I would say have a little nibble here. What I am going to tell you is I would prefer to see you consider starting a little bit of an entrance into this stock, but I would prefer, if you thought about it, towards the 250 to I'd even have a little more patience. Maybe 250, maybe just a little nibble at it at 246. My preference is to see the 246 level, which is the 9-period moving average tested, and that says maybe just a fraction above 247 to 241 would be my entry point on a starter position. And the reason being that it isn't an uptrend. It's been an uptrend for a while. It hasn't had a decent pullback yet. That pullback can usually come from a peak E. There could be a recycle, and I'll tell you right now that if it goes 1 penny above 275 to the 276 area, I'm going to be putting an F/C, thinking that it could still have a little bit further to go. But you've got to decide whether you want to have 10 to 12 cents upside potential here before it takes a breather, or the 15 to maybe even 20 cent pullback if that breather is a little bit longer than usual. And I'm suspecting that if it closes anywhere between 264, it's at 263 right now, or $2.57 today, then I think it's going to be pulling back. So normally I'd say start a little position, but this is at the upper end of a big move, percentage-wise, and I would prefer to get it lower down, and even then I would just get a starter position, because if that starter position holds really well, and even if you make a peak C this week without going over 275, the way it's acting, it says it should try for a leg D, and if the leg D comes in above 318, that's the 200-period moving average, that's really good, because 324 is the gap down low that happened, must have been on a Monday or the first trading day of the week. After it collapsed from weekend news back in the weekend of the 28th of March. So I hope that helps you thinking about it. If you haven't got it now, I'm going to say have a little patience, wait for it. I think you've got your eye on a stock that has a good percentage gain, as long as it holds in that 237 to 235 area for good support on any sharper pullback than just a little dip before trying to go higher. Here's the other thing. If you want to give it a little chance for the upside, if it pulls back to 257, you could have a little, what I would call a short-term trade, a quick trade, because if it does that and then goes right back above the 2.69 period moving average, that's going to say, hey, I can even go a little higher, and then it could try to go for the most recent high of 275. But that would be what I would call a trading position, and a real quick trading position. Is that kind of what you'd be thinking of?
If I'm looking for, the entry position, it sounds like it's more like 245.
I would say that it's closer to the 245 level, and what you're really looking for is a position that's a kind of a starter position that holds very well, starts to build some energy, and then you can add a bigger position if it's starting to look like it wants to be attracted to the magnet of the 318-200 period moving average. So you understand what I'm saying with the biotech?
Yeah, I got you.
You want to be a little bit careful, and I would not get a big position because this is at the upper end of its range. It's about to hit resistance. I'd rather buy a pullback. Hope that helps you, Rich.
Sure does. Listen, thanks, Basil.
Thank you very much. Thank you very much for calling. Rich in Orlando. We were looking at Pran, P-R-A-N, and that is a biotech company. Prana Biotech, it's an ADS. I'm not sure where they're an Australian company, I believe, from the news in the den there. So this is what I want you to do. Let's look at Google. Google is having a rally that is up $2 at 581.25. The way I'm looking at this particular chart is a very important moment, because there's a pattern that I call the falling axe. It's just merely, you saw it right here, and then lower highs and much lower lows, makes a kind of a declining V-shaped pattern, and then when it breaks out, it makes at least a one-to-one to the upside. It's exactly what it did when it broke out on the 23rd of May above the declining trend line at the 565 round number high, and it went all the way to the most recent high of 586.43, pulls back to 565.01, and now we've got another potential one. Looks something like that. And this one is going to be a little more difficult because it needs to clear decisively the 586.43 recent high. Now, what's fascinating is that in the weekly chart, the weekly high of 614.44. Let me just type that in. 614.44. Pull back to the 502.80 area. I thought I typed it in. 502.80 area. And then what happened? It ran into leg A, leg B, and leg B at 586.43 last week is the big challenge, because if it takes it out by 1 penny, it extends leg B. If it pulls back and gets into the wick of last week, into the 574 area, and it starts to trade below that, is to be careful, because then there's a good chance. Was that 5? I'm sorry, that should be 573 area. It says that if I close below 572 at any point intra-week, be careful, because I could quite easily test the 9-period moving average of 567. When you're looking at a LinkedIn, LNKD, nice move up today, stopped dead right at the 9-period exponential moving average, that black line. It's got a leg A, leg B, the upper peak B in the weekly chart. So I'm watching LinkedIn really closely. It's one of our more contemporary stocks that needs, in fact, to prove itself once again, as it did when it went to the peak D top. Social media, LNKD trading at 161.61, up 5. And it's working its way towards the 179 level in the monthly chart. That's the 9-period moving average. But most importantly, it can't do that if it's going to make an H pattern. What's an H pattern? This is what an H pattern is. Looks like a lowercase h. And what happens with this pattern is the back, that declining straight line down, with the rally in the lowercase arch formation, says that if it was to take out LinkedIn takes out the low of 153.31. That was the low of the week of the 11th of July. There's a good chance that it'll test the 144.37 area, which is a 200-period moving average support, and then it could test 136.02. So I'm watching it real closely, because it's one of the high-tech stocks, basically a high-tech stock, that was showing the most promise. Let me see. In the daily chart as well of a stock, now I did this over the weekend, THRM. This is Gentherm. Gentherm has been a fantastic stock, one of the number one maybe number 2 IBD stocks, Investors Business Daily. And what's fascinating about it, I liked it a long time ago and just never got in because it's moved so quickly. Gentherm in climate controls for autos and trucks. Huge, whopping move in the monthly chart. Leg D, 47.52 right now, all-time high. This is remarkable. And then you've got the weekly chart. Look how this 9-period exponential moving average has just been uncanny support. It broke under it. It breaks out above it after the low the week of the 7th of February, 22.84. Goes underneath it, closes just a tad under. The next week, it breaks out above. It goes to 26.94. And from that moment on, it never closes under the 9 EMA to this day. It dips underneath it once back in the week of June the 6th. Remember, that's the week where many stocks pull back sharply. Goes to 37.40. Can't stand being there. And then look what happens. It spikes above, and now it's in leg E. MACD's good, stochastic's good. I have one indicator that's saying, uh-oh, be a little careful. For the very first time, it's starting to show, one of my indicators is starting to show that it's getting extremely overbought, and in the weekly chart, and that says it doesn't have a signal yet, but you got to watch for that signal. Leg E in the daily chart, getting a little extended in the wave count that I've got. A, B, or C. You can call it E/C. So far, nothing wrong with this chart, but it is getting rather extended. And that's how a number of charts are beginning to look. And when you question the din about Apple, look at Apple. Just breaking out 98.80. It needs to get today to 98.81. The high so far is 98. I wrote 98. I kept looking at that and saying, something's wrong. It's 96. 96.80. Whew, that was not good. So this at 96.77 needs 4 cents. And Apple begins leg C in my work. If it goes to leg C, we're waiting for at least a leg D, and then we're going to check the MACD, the moving average convergence divergence, and the slow stochastic. And it's an extended leg E in the weekly chart, and 100.72 is the split price. And it was at 705. You remember that was the high, 705 point something. So in this particular instance, weekly is just, the stochastics at 94%. That's very good. MACD's expanding, but it's way under what it was when it made that all-time high back in, was that August or July? September of 2012. So Apple is acting very well. Let me just look at the 120-minute chart. Yeah, we got no choice to call this a breakout. Yep, there's that pattern, that breaking out pattern of a, in this case, it's what we call a flag pattern, and it breaks out. So this is going to be very interesting because you've got some leadership. I mentioned to my subscribers of my opening call, that's my daily newsletter, gives very comprehensive look at all the different markets. I start posting for over the weekend. Every time I finish a chart, I just post it, and then I repost them all on Monday, and updates with my Traders Corner. And look, here's Cisco. I've got this as a leg F to the upside based on the pattern that made a peak in the Chapman wave back on the 11th of June at 25.17. Just pulls back mildly. It takes a little while to do that. Takes about a week. Goes to 24.41. No big deal. And then it bounces up a 24.75. Now that's A. That's B. That's B, I believe. Yep, that's B. Give me 1 second to look at this. And now I need to check. That went to 22.25, 220. Yep, 22.25. Double, 2. So I could call that Chapman wave Phantom C, but I'm going to be I'll just keep this here. I'm going to say at this particular point, I'm going to be very strict, and I'm calling it preferably C/F, because in this particular instance, we're looking at such strength that it would be unusual just to turn down and not, although it's unchanged today when the market's up, 25.65, double top again. Well, for now, I'm calling it C/F, but it's very good action, not as good as it was before, but the stochastics at 90%. That's very important. Now the weekly chart, has the weekly chart recycle? I'm going to be calling it for now G/C. And if today's got parallel highs with last week, so it's still G/C. The MACD's good, stochastic's good. There's nothing here negative. I don't want to go negative on a weekly chart until I see evidence that the daily's starting to break down. So that's what I'm looking at in Cisco. Cisco is one of the Dow stocks. Isn't that interesting? And the most recent high of 26.49 back in 2013 in August. This is the cup formation that we're trying to retest. I'll be back. Dow's up 129, S&P's up 11. Basil Chapman, Tiger Technicians Hour.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. We're back. Basil Chapman, Tiger State Ignitions Hour, and let me just show you something here. In this particular sequence, we're looking at, I had a question that in about URI, URI, United Rentals, Inc. I can't quite recall what the rentals are that they have, but in the Chapman Wave, the premise is to always get you to at least a D, a peak D. And look what happened. The daily chart in the last move from the 17th of June at 101.80 goes peak A at 104.86, and the very next day the high is 104.85. If you missed that, you wouldn't be correct. It's a peak A. Then it goes to peak B higher, then peak C. Now it's in leg D. The weekly chart's leg F, and the monthly chart's leg E. It's been a spectacular stock. But now the 120-minute chart. Remember, what's the objective of the Chapman Wave? Find the lowest, most obvious low bar, merely count each successively higher peaks. So what does it do? It makes a low at 11:30 on the 17th of June at 101.80. And then it goes peak A, peak B, peak C. Peak D pulls back. Peak D at 106.60 at 1:30 on the 24th of June. Pulls back where to? To the 200-period moving average. Beautiful support. Goes down to 103.11 at 11:30 on the 25th. Starts another A, B, C, D. And D concludes with the MACD turning down. Stochastic giving a negative divergence just as it did on the 24th of June. And what happens? It becomes peak D and it pulls back from 109.18 down to the 104.85 area at 11:30 on the 8th of August. Where is it today? It gaps up to leg D. And I put a plus sign on these just to say, hey, this is where it's a little bit of a warning. We could be pulling back. So what would happen? It's great stock if you own it. I would just keep holding it. But most importantly, I'd put a stop in some part of my position. If you had a really good gain, then some part of my position at about 1.0, probably underneath 104.85. If you want to give up 4 points. If you don't want to give up 4 points and you want to say, look, I'm prepared to take something off sooner than that, then I would say if it makes a peak D, any pullback under 107.36, the 9-period moving average, take a little bit off and plan that maybe I say, we'll have to see how the weekly goes, it'll be money that you want to put back if it goes down to 104. The 104 is where the 9-period moving average is. That's the way I'd be looking at. Now let's just finish our thoughts and my explanation of the QQQ. Because the stochastic has gone to 97% and the MACD is expanding, even though both of them are actually, the MACD is way underneath where it was at the 95.71 high. I'm going to change this plus sign to an up arrow because with the stochastic so strong, if it remains strong, you should get a peak C and then a peak D. And then you've got to be careful. So the Qs on leg D in the daily, there's a chance that it could recycle if this becomes a peak F/B at 96.06, and in the next 120-minute hour bar, it breaks above. That would make a peak and then another leg up. I'm not going to call that just a G/C. I suspect it's going to be C, and that the Qs will go to D maybe sometime tomorrow or the next day in the 120-minute chart. So now let's just run this because we're about to wrap up. You're going to go to Larry Pesavento. Should be a wonderful show with Larry Pesavento. Trade what you see. Now, I automatically be doing this. I'd be looking at that VIX index and saying, hey, you've gone to 13.23 at 11:30 on Friday morning. And then all of a sudden, you come back down, and now you're under the 200-period moving average. If you're going to show any veracity at all, if the market is going to get weak, the VIX needs to climb into the high 13s and get into the 14s and hold. If it just constantly has this bounce and pullback, that's just saying there's buying pressure. And as long as that buying pressure is there, that is very important because 10.28 was the last vote. So let me give the number now. On the Dow, we're at all-time highs, 17,076, and what I said was 17,090s to 17,120 will be the next resistance, and the support will be 16,080.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.